It's Saturday, the markets are closed, but I thought I would make a quick video to possibly help those of you who are a bit more experienced, maybe a bit more advanced. Maybe you have an approach of your own or an indicator that you've been working with and you trust. I'm just wanting to I just want to present this idea. Do you have to use it with the trade alerts? No, you can just leave them as they are. Again, the trade alerts were created for a very conservative target of 20 ticks in the NASDAQ, 10 ticks in oil. Could you get more on daily basis? Yes, you could. But then it's something different. It requires more experience, and it's just not something I set this up for. But having said that, let me show you something. So on Friday, well, Thursday evening for Friday, the prices were 781 for a buy in the Nasdaq, 683 for a sell. So 781 for a buy, 683 for a sell, and the time was 6:37. The timestamp 6:37. So here is the thing: when I post these numbers for a buy and a sell, I do not know when they're going to hit. I have no way of knowing it. So in this case, about 2 hours, a bit more than 2 hours after I posted them, the trigger on the long side was hit, and as always, the first time is the best one, so to speak. So you can get a lot out of the initial move, and then sometimes when price comes back, you don't quite get the same reaction. But in any case, that's not what this is about. I want to present an idea to you. If you are a more experienced trader and you're looking to get maybe a few 20 tick hits a day, even obviously you might not have been watching this. I'm just going to use this as an example. So um, a buy at 781, a sell at 683. So if we were to pick a halfway point, right, it will be somewhere around 730, right? A halfway point between 781 and 683 is around 730. So maybe you can draw like a dash line or something at the halfway point of 730. Here's what you can start telling yourself. All right, let's say I'm over here, right? Let's say 8 o'clock. You're looking at this, let's say, and you say, well, price is above the halfway point and moving higher. Do I have a way of getting long? Why? Because the way this works, as price starts approaching the trigger, once it's past the halfway point, in this case on the long side, and starts approaching the buy trigger, this area starts pulling the price toward it. So in trading, we talk in terms of probability, right? So at least in the short term, the probability of hitting the buy trigger is greater than hitting the sell trigger. So as we are moving toward the trigger and you have some kind of a methodology, some kind of an indicator, or anything else that might help you get long before the trigger even happens, you could have already be in the move up. Maybe if you're trading in multiples, again, I'm talking to you as a more experienced trader with a decent drawdown amount. Maybe you can trade in multiples and start taking profits, and then just let one run go once you passed the trigger. The idea I'm trying to present here is that if you have a way of getting long or short, you could already be in a trade when price is approaching the buy or the sell trigger. So if we move on here, here is the news, right? So there was this 8:30 news. Just the sentiment. All right. 8:30 news, boom, price goes right through. You probably did not trade this, but this would give you 50 points under the short trigger. Now, price now moves on. It pumps up. It brings itself up. Now we said what? 7:30 is about the halfway point. So it's about here. If price is below this halfway point and moving lower, again, you ask yourself, do I have a way of getting short? Because probability says there is a higher chance that the sell trigger will happen before the long trigger, as long as what? As long as we remain below the halfway point. And sure enough, either you just traded it outright or you had a way of getting short. But this low here was 64, looks like 60, 64, 63. So about 20 points from the trigger short. Okay, now again, for the purpose of the test one, I'm going to keep on saying that 5 points. We're looking for 5 NASDAQ points. You've got more than that here. Then there just was this mess of a price. I mean, Friday was just a choppy day. But again, below the 7:30, you're asking yourself, can I get short? Above the 7:30, can I get long? Is there a way for me to get long? I am not saying just go long. I mean, you must have some kind of a rule-based approach to getting long above the halfway point or getting short below the halfway point. Now, in this case, once we got above the 7:30, sure enough, the buy side started pulling on the price and it went right through. And again, it all depends how you would play it. After the fact, there's just there, there are many ways of saying how you would do it after the fact. The trouble is in real time. When this happens in real time, you must have an approach that you are familiar with and that worked for you to trade this idea of stronger above the halfway point, weaker below the halfway point. And definitely, once we break above, you are not interested in shorts. Above the trigger, the market is definitely in a stronger position. And even if you somehow miss the long upon the trigger, you ask yourself, okay, fine, I missed the long. Is there a way for me now to get long? So you see, like, price just touches the trigger, bounce up, touches the trigger, bounce up. If you have a way of getting long, maybe it's something you can use. And then, of course, we enter the lunch time, which time that I hate to trade. And again, uh, as long as you're above the halfway point, which is above 7:30, it's still stronger than weaker. I hope I'm making this clear. The market is stronger when it is above the halfway point between the buy and the sell triggers. It's not quite as strong than when it is above the trigger, but it still is stronger. Again, referring to probabilities, it is still stronger than weaker. And you'll be surprised how your trading will improve once you start eliminating one side. Once you start, once you have a way of saying, okay, I'm going longs only, or fine, the market looks weaker, I'm going to focus on shorts only. Um, that doesn't guarantee your success. Of course not. There is a risk in trading, and we all trade at our own risk. I am talking about probabilities. probabilities. So then, of course, well, this toward the end of the day, after 3:30, a complete breakdown. Um, and of course, well, once price just breaks below the halfway point, now it's the sell side that pulls the price, and it got there very fast, and actually closed below it, which actually is at least at this point would be bearish, of course. Um, so that's the idea. Please ask me questions if I am not completely clear. I am trying to I'm trying to be clear, just trying to give you guys more tools, maybe, so to speak. uh, I am not gonna recommend any indicator or any approach for this. That's why the title of the video says for experienced traders, because this is only for those of you who have traded with something in the past, who you have some time uh, with, and it worked for you to some extent at least. Try to use it with this idea of judging the strength and weakness of the market based on where it is in relation to the triggers. Okay. As far as price completions, I know I promised a video on price completions. I'm gonna see, the trouble I had last week is that there was a rollover and it kind of messed stuff up toward the later part of the week. But in a week coming up, at some point on Monday, I'm gonna post in Telegram the price completions for the week, and it's going to be obviously for the March contract only. Now, here is the main idea of price completions, and I'm sorry I even brought it up. Price completions have nothing at all, nothing to do with the triggers. It's something completely different. It's something I use in my more of a I use it in private equity trading, more than funded account trading, because of the basically. All right, okay. When I post the numbers on Monday, the price completion numbers, put them on your charts. What you're gonna start seeing is that price moves from completion to completion. Um, it very often would stop at a price completion area to decide if it wants to go, let's say, higher to the next price completion, or it is rejected and it could possibly move down to the previous price completion. Now, this is an extremely oversimplified way of how it works. In reality, it's there are a lot of moving parts. It's a lot more complex, and it really has nothing to do with this trade alert beta testing, in the sense that it has nothing to do with the triggers. Um, but very often, if a long side is triggered, the market is going to try and attempt the price completion above. And if the short side is triggered, the market is going to attempt the price completion below. Why they call it price completion, I don't know, because I don't have a better name for it. It's completion because it's an area of decision. What are we going to do next? Are we going to go up to the next area, or are we going to go down to the previous? And it, sometimes these areas are 80 points apart. Sometimes it could be 200 points apart. It all depends on a whole bunch of things. Um, and I really should not have brought it up. Um, but in any case, it just has nothing to do um, with the, I guess, trade alert service, if it will um, happen. So, all right, that's really all I wanted to say for today. Again, I encourage you guys to just grab the smaller targets. I know we all want to make 400, 500, 1,000 a day. I understand, but just take a look at this, right? I mean, if you look at from 9:30 from U.S. Open 9:30. I mean, does this look like a trending market? It's you know we might want to grab 50 points, um, but it would take a very special skill to grab 50 points out of this kind of a mess. Um, but if you are looking for five, the market will give you five. The market will give you 5 points multiple times a day. Um, I just think it's the easier way. And you know, if and some of you are laughing at 20 ticks in Nasdaq and 10 ticks in oil, but I'll tell you that if you can day after day grab 20 ticks in the Nasdaq and 10 ticks and or let's say 10 ticks in oil, it will put you in the top 4%, in the top 4% of retail traders. 96% of retail traders cannot, on consistent basis, be profitable 20 ticks or 10 ticks, or let's say $100 per e-mini contract a day. So do not underestimate the ability to be consistently profitable at $100 per contract per day. All right, that's it for the Saturday. Leave a comment. I hope you have some kind of comment about this. Any questions, of course, and I'll make a video on Monday.